The French head to the polls this Sunday, the 30th of June, in the first round of an election that was called off the back of an embarrassing loss from President Macron's party in the European elections. Now putting the onus back on Marine Le Pen's RM party, where the possibility is that we could see them really gain a victory if the polls are anything to believe. It was a roll of the dice from President Macron. His idea is presumably that he might be able to gain a greater majority and prove that that vote may have taken place on the European stage. But from a domestic standpoint, that's not necessarily going to stand. But as it stands, things are looking like he could take the loss. Now, bear in mind, this is the first of two votes. The first takes place on the 30th of June. The second takes place if we don't see one of the parties take 50% or above of the vote. The second will take place a week later on Sunday, the 7th of July. And so ultimately, markets are really preparing for potential volatility. We've already seen significant underperformance in terms of the CAC in relation to other European markets, but in terms of global markets in particular. And there's a significant risk that that continues as we move closer to the event. And of course, depending how the event plays out, potentially afterwards as well. I just want to point out a few sort of significant charts in relation to this, and we could talk about the potential market moves. Now, first and foremost, you can see that this uplift we've seen from the France's National Rally, so the far right party headed up by Marine Le Pen. You can see here growth across both segments, both male and female. So certainly this trajectory has been moving over the past 5 years and moving into a position where they could potentially challenge. They aren't necessarily just being perceived as a so-called racist party, and that they're actually being viewed as potential leaders within the country. And certainly they appear to be positioning themselves that way at the moment. This is a Bloomberg poll of polls, and you can see here that we're actually seeing them gain further in front as we move forward. So there's a far left grouping as well. We've got the centrist grouping with Macron heading it up. But certainly as things stand, it's the National Rally which has taken and gained on that lead. And so the question mark here is, are we going to see them take the victory? In terms of one of the major elements to note around this, it is the fact that when you're looking around the support for the war and the support for Ukraine within its war against Russia, you can see here that the RM party, the far right, are significantly opposed to it. So this points towards a possibility of them withdrawing funding and the possibility of that happening in the same year that we could see Donald Trump coming into power. And he, again, has pointed towards the idea that he would just withdraw funding for Ukraine. That could possibly swing things in favor of Russia and them essentially locking in their gains, whether it's Crimea or different parts of Ukraine. And so, you know, depending on who you are, that could be viewed as a significant loss as they essentially take ground off of a potential NATO member. But on the flip side, you're looking at the possibility that the war in Ukraine is over, and therefore you see some of those tensions between trade between Europe and Russia, the US and Russia potentially resumes, and the possibility that we see some sort of normalization in terms of the commodity space in that area. So certainly that's a key area to be looking out for. Another area worth noting comes in terms of the cost of borrowing, but also the levels of debt within France. France already is in a position where it has been ramping up debt. And ultimately, it is their job to try and drive down that. We need to see greater fiscal responsibility taken in the French economy. And Marine Le Pen and her party essentially plan to increase spending. Now, we have over the course of the past weekend heard from the head of the sort of economic side of things from her party, and he said that they will follow the fiscal rules set out by the euro area. And that they won't necessarily ramp up spending to the degree that potentially or previously had been speculated. There's a number of different policies that they have laid out which could point towards the possibility of increased spending, in particular a slashing of the VAT on energy. But certainly this is one of the key concerns, and the fact that we've been seeing their party move to allay those concerns really does highlight the fear that if we do see Marine Le Pen's party take the victory, then we could see a significant risk-off move in markets, in particular markets related to the French economy. And if you think and cast your mind back to what happened when Liz Truss came into power in the UK, the sharp rise in terms of borrowing costs in the UK immediately caused massive distress. She didn't last very long. And so there's concerns that we could see a similar kind of thing happen in France. There's already forecasts that we will see steady growth in terms of public debt in France. But of course, under this new leadership, we could see that ramp up even more. So certainly the ability to allay those concerns will be absolutely key in terms of the market movement. And this highlights exactly why. Now, what we've seen recently is, as we see in this sort of orange line, a massive spike in terms of the cost of borrowing in France, so the 10-year yield, relative to the German 10-year yield. So that ramp up in terms of borrowing costs has also come alongside weakness in the CAC relative to some of these other markets. This is a proxy for what could happen if we see Marine Le Pen take the victory, whether it's this Sunday or the Sunday after, more likely the second Sunday. And so there's significant risk that we see the borrowing costs spike. That could cause significant downside in terms of the CAC. And certainly another part that's interesting is that we've seen this sort of divergence in between the relative movements with, as we see here, the French and the UK 10-year yield. You can see generally we have a close correlation between the France and UK 10-year yield and then euro sterling, as people essentially are just concerned with where monetary policy is moving. Instead, now we're seeing a spike in terms of French 10-year yields based around increased fear for the French economy, essentially, and the financial position of the country, rather than a view that we're suddenly going to see the ECB hiking interest rates or holding off for any longer. But we're seeing that divergence playing out. And certainly that's something that we will be following as we go forward. I mean, if we're looking at euro sterling, the trend is very clear at the moment, and that is that we have been seeing weakness playing out. I'm just going to put it into full screen. We've seen weakness playing out of late with a decline through support coming into play here. You can see here a move. Let's just get this horizontal drawn on here. Move down through 0.85, essentially, pointed towards further downside. And certainly as we're looking at that daily time frame, a short-term rebound now looking like it's faltering once again. As we head towards that election, I think there's likely to be increased jitters within the likes of the euro, the likes of the CAC, as they fear the potential for negative consequences and potential for a spike in terms of borrowing costs in France. So keep an eye out for this, but certainly for me, this looks like a potential precursor to further downside. You can see here we've dropped down towards this 0.843. We've also dropped through this near-term support level of 0.844. But the short-term rally looks like a rising wedge formation, and we're starting to falter here. Signals the possibility of weakness for euro sterling going forward. If we were to see Macron take the vote, then I think it's likely we'd see a relief rally. We'll likely see some strength for the euro and strength for the CAC. But as we move into it, we're likely to be governed by fear. And if we see the result move in the way of the far right party, then you're likely to again see significant jitters over the near term. And both of them do point towards the possibility of downside for the euro over the near term. Here is the CAC. Now you can see here significant weakness of late over the course of May into June. Significant downside. Now we have been regaining some ground. I mean, it looks quite similar to euro sterling from that perspective. Let's just see if you're looking at it over a short time frame, as you can see here. So we're seeing this close correlation here between euro sterling and the CAC, as people essentially sell the euro and sell the CAC when they become fearful once again, right? So for the time being, we're taking a bit of a breather, but by and large, the trend of late looks pretty bearish. And the gains we're seeing at the moment do have the potential to start to falter as we get closer to the vote. So near term, we're seeing this uptrend, higher highs, higher lows. Look out from an intraday perspective for a decline through your price swing lower. As it stands, that's 76.02. If we see a break below that level, then it looks like the bears are going to be back in charge. If we rally up through your near-term resistance of 77.29, then you just shift your swing low to 76.19, and that's the next level to watch. So, we're regaining ground, but by and large, I think this is a breather, and I think we're likely to see increased fear as we get closer to the event itself. You can see near term, we could see a move back up towards that descending trend line, but the bears remain in charge over the sort of wider sort of midterm view, I would say. So regaining ground in terms of the CAC, regaining a bit of ground in terms of euro sterling, but both of them look at risk. If we are to see the polls continue to position themselves in favor of Marine Le Pen's far right party, and if we ultimately see them take the victory, you're likely to see significant jitters further upside in terms of the the French 10-year yield. And that would likely drive the CAC lower and the likes of euro sterling lower. If we see Macron manage to pull it out the bag and he takes the victory, then again, you're likely to see the euro recover against the pound in particular, and the likes of the CAC staging a significant recovery. People have been trying to pick the bottoms here. Certainly, if we're looking at individual stocks, people will be aware of the fact that some of these sort of highly internationalized names maybe won't necessarily be that negatively affected, even if we did see the vote go against Macron. So from an individual stock perspective, some people will be looking to pick the bottom, but certainly anything highly aligned to the French economy, you're likely to see significant downside. And ultimately, you're likely to see contagion moving throughout the CAC if we were to see the vote move in favor of Marine Le Pen. So look out for these markets. It's going to be a really interesting time. The first weekend, by and large, we're likely to see volatility, but I think the second weekend could be the big one as we ultimately find out who's going to take the victory. But certainly from a market perspective, European markets, I think, are likely to be pretty jittery over the course of the next 10 days to 2 weeks, just because of the increased concerns of what could be to come over in France.